Hello, I'm James, and I'm going to talk to you about why I believe that Corona Crash 2020 is the perfect time for you and I to start our investing journeys. You may have heard this quote before from Winston Churchill: "Never let a good crisis go to waste." And to be honest, if this isn't a crisis, then I don't know what is. This year we've seen one of the fastest stock market drops in history. The market was ticking along and then bang, almost overnight dropped significant percentage. Now I just want to clear something up. There's a lot of misconceptions when it comes to stocks and stock ownership. I've heard people say, if you're going to play the stock market, you may as well go down to the casino and put it all on black and roll the dice. It's just the same. It's better to own something like real estate, which is real. I would just want to clear up that ownership of stocks, it's not just a squiggly line on a graph. Ownership of stocks is actually ownership in real businesses, in real companies. And companies are designed to make profit. So owning stocks is actually like owning a piece of something that's job is to make you more money. And if you ask me, that's pretty cool. Reason number one: you make your money when you buy, not when you sell. You may have heard that quote before. I think I heard it from Robert Kiyosaki in Rich Dad Poor Dad. And when we see a massive stock market crash like we have, can be an amazing opportunity to buy. Just one example of something that I purchased that illustrates this point is Afterpay. So I bought Afterpay shares at approximately $8.50 a share. And as you can see here, that's turned out pretty well for me so far. Reason number two: this crisis has caused a lot of investors to sell off their assets quite quickly. And this isn't just true for stocks, but other assets as well. But for this, I'm just going to talk about stocks. In March and April, we've seen massive sell-offs in the stock market, which has resulted in a lot of companies, a lot of shares, being sold at under their fundamental value. If you know how to analyze companies and businesses' fundamentals, you can determine when something is selling for less than its fundamental value. And there are a number of techniques in order to do this. I expect we're going to see another downturn. So it's really important that we're ready to capitalize on those opportunities when they show up. So currently we've seen what's called the deleveraging phase, where stocks have been sold off. Then we've seen now that rebound in Australia and the US in particular, where we're seeing what's called the hope phase. It's come down, it's bounced back up, hope phase. And then, as we've seen throughout history, often what can follow is the reality phase, which is another sharp downturn, which can be quite a long period of time. And if we think about the current environment here in Australia, for example, it's sort of looking from a macroeconomic perspective that we could be expecting a lot of economic pain for the coming few years. And if that's the case, I think it's likely that we're going to see from deleveraging to hope, where we are right now, and then reality phase. My advice to you and myself is to be ready. Reason number three: the stock market on average over the last 100 years has averaged around 7 to 10% annual return. And so due to the magic of compounding, this has created a lot of opportunity for wealth creation through investing in businesses through the stock market. If we are ready to buy shares in businesses that are good businesses, undervalued, cheap, we stand to make a lot of money and create a lot of wealth for ourselves over time. Reason number four: inflation. I don't know if you remember being a kid and going down to the shop with, a few dollars that your parents gave you to go buy milk and bread or something to that effect, and you would be able to buy heaps of lollies and, lots of things for what today we would consider a small amount of money. Those same few dollars today, however, if you were to go to the shop and, purchase something, you might only be able to get just the milk or just the bread, and certainly not all of those lollies that you would have gotten as a child. And that's an illustration of what inflation is. So inflation essentially means The purchasing power of your dollars today is less than the purchasing power of your dollars yesterday or in the past. Which means if we just hold our cash, underneath our bed or in our bank account, not accruing interest or not investing in anything, essentially that cash is worth less tomorrow than it is today. It'll still say $10,000 on your statement. However, what you're able to buy with that $10,000 is less. Essentially, if you're not getting a return on that cash of at least the inflation rate, you're going backwards. And that's something that we often don't consider when we just put money away in our savings accounts and not actively investing it. So reason number 5, and just to wrap everything up and conclude, is to just start. It's so important to just begin things in life, be it investing, be it picking up a new skill or a hobby, getting in better shape, looking after yourself. The most important thing is you just begin that journey. It's not about doing it perfectly. What matters is that you're doing something. So if we think about this in terms of investing, which we're talking about here, even if you were to get a mediocre return in the short term or the longer term into the future by starting today, that's still so much better. It's infinitely better than getting no return at all by not doing anything. And it's even better again than your money sitting in an account being eroded away by inflation. And in Australia, our inflation rate every year is around 2%. What that effectively means is for every $100 that you have, after 1 year, you effectively have $98 worth of value. And so, if we were to compare that to an average return of the stock market of 7%, well, you would have $107 worth of value after 1 year as opposed to 98. The best time to start investing was yesterday, and the second best is today. So I just want to say that if you're watching this, chances are you're making those steps. You're doing that first part, you're getting the ball rolling, and you're learning. And that's the most important thing. So congratulations to you. And if you would like to see more of this type of content, if you want to follow along and learn more with me about investing and ultimately creating financial freedom in the future, then follow along, and I'll look forward to speaking to you soon.